All right. We are going live right here from Cabernet Way. I am so excited. My name is Maria Sacco Handle. I am with Berkshire Hathaway Fox Roach. I'm the manager of the Margate office, and my team works out of Brigantine. And with me here today is Mike Mento with Prosperity Mortgage, here to talk to you about a wonderful program they're running now through the end of the month. Mike, I'm going to let you take it
Sure.
away. You want
Yeah.
to say a little bit about yourself first?
Yeah, absolutely.
Let everyone.
I've been in the mortgage business for about 24 years. Started as an intern in college and rolled right into a full-time position. Um, Live in Margate, two girls, ages 10 and 7 in the Margate school system. And my focus area is basically Atlantic and Cape May County.
Right. And you've been great. I have to thank you for everything.
Yeah, my pleasure.
Mike brings programs to us as an office, talks to us about the programs, walks us through them. And when I heard about this one, I just couldn't even believe it. So take a listen. This is one you're going to
Sure.
want to watch. Spend a few minutes with us while Mike explains this, and we'll talk about it. Go
Yeah,
ahead.
so we're essentially providing an incentive for clients that are purchasing a primary residence. The property type can be a detached home, a townhome, or a multifamily property as long as one of the units is occupied personally. So owner occupied, minimum credit score is 620, minimum down payment is 3.5% of the purchase price, which is great.
Yeah.
So you don't need to have perfect credit, 620 is the
Right.
minimum. And my company, Prosperity Home Mortgage, is providing a subsidy and providing a discounted interest rate of 4.99% for years 1 and also 5.99 for years 2 through 30. So we're discounting year 1 by 1 full percent, no additional cost to the homeowner or the mortgage applicant. It's being covered by my company, Prosperity Home Mortgage.
So for all those people who are saying we're waiting for the rates to go down, here's your chance.
They're
If
here.
you're
Yeah.
a first-time home buyer, right?
Sure. Yeah, you actually can be a move-up buyer as well.
Oh, cool.
For this,
Okay.
first-time home buyer is not a requirement to get an FHA mortgage.
See that?
And to Maria's point, yeah, the so-called expert opinion is that mortgage rates should settle in somewhere in the mid to high fives at some point this year, and we're already there. And with this program, you have a discounted rate of 4.99 for year 1, and then years 2 through 30, the interest rate would be 5.99%. It assumes a purchase of a primary residence must live in the property for at least 12 months,
Right.
and then after 12 months, you do what you choose with the property. If you wanted to sell it, refinance, put a tenant in the property, that's ultimately your decision at that time.
And what I love about it is, we're always looking at some of these homes at the shore. There is a cap for a single family home. What's the cap on
Yeah,
this?
so if it's a single family home, the maximum loan amount for Atlantic and Cape May County is roughly $541,000. So you could look at a purchase price of, call it, 560 or below. Make a down payment of 3.5% to 5%, whatever you choose to do. 3.5% is the minimum. If you're looking to purchase a multifamily property, whether it's a duplex, triplex, or 4-unit, the maximum loan amount is higher. So you can borrow in excess of $1 million with a 3.5% down payment if you were to purchase a 4-unit property and occupy one of the 4 units as your primary residence.
And I love that, especially for a lot of young adults starting out. You could hop right into an investment property for 3.5% down, live in one, rent the other, duplex, triplex. The amount goes up with those, correct?
It does.
Yeah.
Yep.
So if you're getting a duplex or a triplex, that amount goes up. And you're still only putting 3.5% down. And, at the end of the 12 months, you can condo it out. You could sell one off if you want. You can keep it. You can
You could
rent
have a
both
tenant
of them.
move into the unit that you
Right,
previously
right.
occupied.
It's just
a lot of different options.
it's a great way to set a young person
is.
up
It is.
in real estate. So,
And furthermore, if you're buying a multifamily property and using FHA financing, if there's existing tenants in place, that rental income or a percentage of the rental income can help the borrower qualify to get the mortgage as well.
great point.
Yeah.
Great point, because a lot of younger people cannot afford a duplex that's 600,000-700,000,
Correct.
but you're able to use the income already in place.
Correct.
Can you use like an empty unit, like income
can,
that can
yes.
come in?
Yeah, so if the unit's not tenant occupied,
Right.
there's not a lease in place, the appraiser who goes out and completes the appraisal report to
Right.
determine the fair market value will also determine the fair market rent of that vacant unit. And we use 75% of the existing rental income
Awesome.
or the proposed rental income determined by the appraiser to help the mortgage applicant qualify to get the loan.
And you know, it's funny because my husband and I talk about this all the time. We want to set our children up for success, right?
It's a great way to start.
It is. And
Yeah.
I always say that, you know, my three are still a bit young, but I would love to buy them each a duplex. I don't mean buy them, set them up with
Sure.
a duplex.
Yep.
Start them out with a duplex. And you know what? You stay in it for a year, you stay in it 2 years, 3 years, whatever. Whatever you do after that, that's on you,
Sure.
right? But you have the opportunity to have an investment property that you can have forever. You can, again, condo them out, keep one, sell one. One of my friends recently bought a duplex because she has two daughters. And she said down the road, one will get one condo and one will get the other. I mean, what a great thing to do at the shore.
Yeah, and from an investment standpoint, you know, if you're an investor looking to purchase a 4-unit property, typically the mortgage industry will require a 20, 25, or 30% down payment to buy that property strictly as investment use. If you're buying a 4-unit property and occupying one of the 4 units as your primary residence, you could do this as little as 3.5% down. So to Maria, to your point, you can acquire real estate with a lot less money out of pocket,
Right.
assuming you intend and move into the property and live there for a year.
That's great. And you know, the other places I was thinking this would be ideal is around colleges,
Sure.
right? Around colleges where you know that there is a stream of students that
Sure.
need a place to
Yeah.
stay, maybe around Stockton.
Built-in rental demand.
Exactly. I know there was a woman up at Penn State. That's how she started out with investing. She just kept buying duplexes around Penn State. I mean, it's a great
Good strategy.
opportunity. If someone wants to put more than the 3.5% down,
They can.
they?
Yeah, absolutely.
So there you go. If you have more, you want to put down 10%. Is there PMI?
There is monthly
it?
PMI.
If
Yeah.
it's not 20%, right?
Correct. Yeah,
Okay.
so the monthly payment will consist of principal and interest, property taxes, homeowner's insurance, and monthly mortgage insurance. If the property's in a flood zone, flood insurance would also be included in the monthly payment.
Right. Okay. And
Yeah.
this is going on. You have to be under contract before the end of the month, which is right around the corner. So if you're on the fence, if you're looking at properties, you know, give your favorite realtor a call so we can go out and find you something. And Mike, give them your information so
Sure.
you can call. They could
Website
call you.
is firstandlastname.com, so it's michaelmento.com, and cell phone number, text, call 609-839-1203.
Thank you so much.
Appreciate
I
it. Yeah,
appreciate
thanks
you
for having
stopping by and
Absolutely.
talking. We'll see more of Mike Mento as we do these segments for you. And it's a great day at the shore. Thank you for following.